Good morning, everyone, and welcome to this new edition of the morning briefing. Let's quickly take a look at how last week ended with a bit of a recovery. In short, after a strong directional week, we can describe it as having sustained selling with fairly high volumes, as we pointed out, during the week. Then in short, there was a base severe from the buyers who made the purchase. First attempt at recovery, or rather in who at the close on Friday, especially from a broader perspective. Indeed, the situation in Ukraine, I must say, is the one to monitor, despite all the speeches started for peace of the Trump administration. It seems that Europe seems to disagree on this matter, perhaps because it has been excluded from these negotiations, and obviously not. I could tell you more. In this regard, however, it's important to acknowledge this fact that we're heading towards the rearmament of Europe. Frankly, well, I'm a bit worried about this situation. We'll see, what the developments will be at the moment. So what we can do is pay attention to the cat. Please be patient. And basically, we had to send away an involuntary interruption. We were saying, so this new wind of war being pushed by Europe has already sent various stocks soaring in Europe this morning related to the arms industry. There's a lot of talk about rearmament. I'm worried about this, as I was saying. So we'll see what the developments will be. Let's move on. Let's move on to trading. So as we were saying, the situation, regarding the American indices, hasn't changed significantly since Friday's close. We're still in a downward phase, and probably today we'll see a new attempt at rebalancing between 28 and 21. Probably, and these will be, those will be, the two limits to monitor, at least regarding the NASDAQ, which we're looking at right now. So a break of these levels could lead to an upward movement, of course. So an attempt to recover also at 21 and 3, which then, basically 21 and 3, 21, 3, 21 and 4. So this should be the first real area of resistance to the downside. Obviously, if 28 is broken, we're definitely going to test with low probability the low set on Friday. A break of these would lead to, broader movements. We'll see then, the developments. No, sorry. That said, indeed, let's move on to the standard of the course. The situation is more or less similar to that of the NASDAQ, which, like all the other American indices that we follow here, the area to watch is definitely that between, let's say, between 5,059 and 95, 6,000. And while monitoring downwards, this one here between 5,930, 5,950, 5,9. In short, this should be the support tool area. Primary to hold in between RD1 and SD1, as we have, the algorithm signals. Obviously, here on the upside, the first real resistance, we have it in this area here, between, and we have it. In short, another one then later in the area, 60600 UBC. So this area between 61030 and 61050 is the major resistance area for attempting new recoveries of highs. On the downside, of course, just like for the NASDAQ, we are monitoring the area of Friday's close, which is definitely the limit to monitor to see. So assess any further bearish developments. Let's move on. to the Dow Jones. According to what we recall, here it is. Dow Jones, a bit more vigorous, also because Friday had basically a big, even Thursday held up better all week. Just like the Russell, the recovery, well, seems pretty clear. Let's say that a bit of a trading range has formed here. We're looking at between 43 and 3, let's say, with points. 43 to and so a rise between 50, 44,000. So these are the two levels I would monitor for the Dow Jones. As long as we stay within this range, we can comfortably trade from the range, maybe trying some shorts at the top and longs. At the lower end, I state that for now we are a bit more tightly anchored compared to the Dow Jones in relation to the S&P and NASDAQ. Here, let's say we can identify a range more clearly between RD and SD. There's a bit less volatility, a bit less swing amplitude. So in this first phase, we're going to monitor these two levels. Of course, right after we have SD1 and RD1, which serve as the first real levels of support and resistance to understand the direction of the day. Obviously, a breakout upward here. We do have, yes, of this this area to break through 44,000 as we indicated. But once we pass this, you can easily aim first for the males. So here 43,300 to then also a little push towards 44 and 5. Let's move on to Russell. Here we are. There it is, the Russell. Okay, we go. Let's remove some lines for a moment. Okay. So yesterday, well, from the opening, I made a nice little spike upward. So it immediately went to test the first resistances of the VX area. So with the cluster that is provided with the string. And at the moment, well, we are right on the edge. Let's talk about this shape, technically called the cup and handle, like a coffee cup. It's a technical pattern with rounded lows. And so a breakout here, so of the handle, now they're forming the handle. So a breakout at this level could definitely lead to a recovery towards the area of the highs of the weekly string that the premium subscribers. Okay. But a downturn, obviously we have this area of a triple bottom, we can easily call it that. In short, in the 2130 area, so a break of this, obviously from rebel to in short to low movements. Frankly, I don't think it's very possible, but well, as always, we can't predict the future. We have to limit ourselves to acting based on what we have in front of us. We always have to live in the moment, as I always tell you, as I hope. So you've all seen Eri's video. I hope it can be useful to you. In short, in your daily routine, let's take a look at the commodities, the two that we usually check in this morning briefing. Let's start with oil. The situation, not different from what we pointed out on Friday. So we're working, you see right now in this range that we can define between 70 and 50 and 69 right now. There's this area to get through. Obviously, you see last night, well, in fact, on Friday, it bounced off this area and we went to retest it. So this is an area to monitor in case it gets broken. Surely there will be an attempt to attack the day's lows here. And then, it will be decided whether to aim downwards or not. It could also turn out to be a day. Here we are in a range with a strong alliance. Within these patterns, obviously, here is the level to monitor on the upside. And this whole area here between 70, between 70 and 50, let's say, and 71 and 10, 71 and 15. This is the area where it could be a landing point. And that's the one to watch for any potential upward breaks. Of course, this is something to monitor closely. The situation. As for the war in Ukraine, because Russia is a major supplier of oil. So all of this will definitely influence the price of the asset of oil. Let's take a look at gold. Here it is. Then, in short, we had pointed out this range up high that at the moment, well, has been broken. There was this attempt to break with a test. Let's talk about this base on which this range was formed with the opposite change. This attempt to break, the break stopped right here in the area of 2,850, which is an important support area. There's a new attempt to re-enter the range, of course, a return to this range. So above 29, in short, it would definitely drive the price up into the high area, if not beyond. Because then, well, we know that when you exit the range with a false break or maybe with a break, but not accompanied by volumes or substantial orders, sell orders, in short, the price could easily re-enter the range and then shoot up on the other side, as technical analysis, well, teaches us to understand. To understand about that on these dynamics. As for today, well, we're already close to the highs since last night. In short, it was a nice surge. We are within the range of the BC3 levels that we are working on. But the idea within these levels, yes, here is the limit of the always of BC3. Well, with the closing level, so keeping an eye on this area between these two BC3 levels. And a possible, in short, I could also do a test of the HV levels and then maybe try a new attempt to the upside. On the contrary, in short, a reading of the level, HV. It would definitely give, following this movement that we can notice here, that could very easily extend beyond. From a data perspective, there's the index, I think, at 3:45 p.m., so a quarter of an hour after the opening, and then 4 p.m., half an hour after the opening of the American markets, 2 data points. The purchasing managers, in short, will definitely give us some indications on what the development prospects might be of the economy. I don't think there are any other important data, nor quarterly reports from companies. Primaries, watch out for the banking sector. In Europe, as I was saying, it's the sector, in short, for armaments, because for sure, in this moment, it's the sector that's attracting the most in Europe, at least at the opening. With this, we conclude this morning briefing. As always, I invite you to follow me on my social channels, on X, on Patreon, on YouTube. Of course, join our channel, Discord. Happy week to everyone. Have a good trading day, and we'll catch up after the chat. Thanks, everyone, for your attention.